So if, we do get a recovery, gold bounces back in December and somehow drags silver with it, and we get to New Year's Eve and silver is posting its highest yearly close of all time, that may really set us up for it.
You're watching Silver News Daily. Subscribe for more.
Did you know that silver, the precious metal often overshadowed by gold, could be on the verge of a historic breakout, soaring past $50 an ounce, and possibly even shattering its all-time highs by 2025? You might think that sounds far-fetched, but Craig Hamke has uncovered compelling evidence. From skyrocketing industrial demand to massive supply deficits and gold-to-silver ratio tipping in silver's favor, that paints a very different picture. What if I told you that silver's potential isn't just a speculative bet, but a logical outcome of powerful market forces already in motion? Stay tuned, because you're about to discover why silver could be the best wealth-building opportunity of the decade, and why now is the moment to position yourself for what's coming next.
And we started talking about this at my TF Metals Report site. I think Thursday of last week, I was really pleased to see the recovery from that almost hysterical trade post the election. And we can probably talk about what I mean about that in a minute. But, gold and silver just got smashed for about 6 or 7 days after the U.S. election. And we had a nice recovery last week. But by Thursday of last week, I started warning everybody on my site, we got all these expirations looming, okay? They were not just going straight back up to 2,800 in gold from here. Just because, we've seen this hundreds of times before, and now we're getting it today. My expectation, again, I told everybody this last week, I think gold had moved far enough. It was up $130 last week, up every single day last week. It moved far enough that I don't expect gold to make a lower low relative to those kind of washout lows back on Thursday, I got to do the math, 14th. We got down to 25.41 early that morning. I'd be really surprised if we got down that far. The momentum indicators were so washed out that morning that even if we did trade down to, you pick it, 25.25, you'd have what the technicians call a positively divergent low where price goes lower, but the momentum isn't nearly as bad. So that would be a low. But again, I don't think we're going to go that far. That's another, $70, $80 down from here. I think we're just going to now have the first higher low in a recovery. Silver, though, on the other hand, I told everybody last week, I said, I would not be surprised to see a double bottom. There's a lot over just even the last 6 months, a lot of either support or resistance at 29.50. That's kind of where I think we're headed. We got to 29.71 back on the 14th. I wouldn't be surprised if we head down somewhere between 29 and 30 again, just to freak everybody out. And then you get in a rally. The economic data, I suspect in December will not be as strong as it was prior to the election last month and all the other months so far this year. December seasonally is a very strong month, Elijah. We haven't had a down December, I think, since 2016. Beginning in 2017, we've been up every single December. It was only 1.5% last December, but the average 2017 through 2022 was about 4%. And we all know January is usually a good time as well. So again, started thinking that we probably going to pull back this week due to all these COMEX shenanigans. But I think then to finally answer your question, I think we rally in large part through the month of December. We finish up what is just a fantastic year, especially in gold. And then we look forward to next year.
Silver's future isn't just about shiny coins or jewelry. It's about becoming the backbone of some of the most critical industries shaping our modern world. Did you know that over 55% of silver's demand comes from industrial applications? We're not talking about niche uses. We're talking about essentials like solar panels, electric vehicles, advanced electronics, and even green energy infrastructure. As the world races toward a greener future, silver's role as a key component in renewable technologies is skyrocketing, driving unprecedented demand. But here's the kicker: the supply isn't keeping up. According to the Silver Institute, the silver market is facing its fourth consecutive year of supply deficit, with demand outpacing mine production by a staggering 215 million ounces in 2024 alone. And that gap isn't shrinking. It's growing, fueled by silver's unique properties that make it irreplaceable in many technological processes. From conducting electricity more efficiently to being a critical element in the global push for clean energy, silver is in a league of its own. Consider this. Every solar panel produced requires silver to function, and with governments worldwide committing trillions of dollars to renewable energy projects, the demand for silver in this sector alone is set to soar. In fact, it's estimated that by 2030, the demand for silver in photovoltaic applications will have grown by 85%. That's not just a trend, that's a tidal wave. Meanwhile, global mine production has remained relatively stagnant over the past decade. New silver deposits are becoming harder to find and costlier to extract. Unlike gold, which enjoys substantial recycling rates, much of the silver used in industrial applications is lost forever, further tightening the supply. What does this mean for you as an investor? It's simple. When demand surges and supply can't catch up, prices inevitably rise. This fundamental imbalance is a major reason why experts like Hamke are so bullish on silver heading into 2025. And it's not just industrial demand that's driving silver's appeal. Investment demand is also picking up steam as savvy investors recognize the metal's dual role as both an industrial commodity and a hedge against economic uncertainty. With inflation fears, rising global debt, and increasing geopolitical tensions, silver's appeal as a safe haven is surging alongside its practical applications. Let me ask you this. If silver's price is already climbing steadily on the back of these trends, what do you think will happen when governments ramp up their green energy initiatives even further, or when industries begin to feel the squeeze of silver's limited supply? These are the questions that should have every investor paying attention to silver right now. So if you've ever thought about diversifying your portfolio, this might be the perfect moment to dig deeper into why silver's fundamental picture is stronger than ever and why its time to shine is only just beginning.
That typically prompts the algorithmically programmed trading machines that make up the majority of the volume this time of day, usually prompts them to buy gold futures and not sell. And then, of course, the dollar index sees that, or traders or machines or whatever that see those lower interest rates, they sell the dollar. And so the dollar index at one point today was down almost a full point. You put that together, you might expect gold to be up $30 or $40. But it's the other way around. Now, yeah, okay, is there a safe haven bid that's coming out? I mean, how much of gold's rally, even just last week, was due to Hezbollah and Iran? Not buying that one. And I sure don't think the situation in Ukraine has gotten any less scary. And so, I don't know, by deduction, I settle upon just the old bugaboo, which is COMEX option expiration day, this one in November for the December contracts is the one time all year that the front month is both gold and silver, December gold, December silver, and options on those contracts expired at the Monday COMEX close here on the 25th. Those contracts then go off the board and into delivery on Friday, which means you get these massive rolls of positions and spreads that are legged out and taken off and moved from December into February or December into March, as it is for silver. And it just makes it very easy to see price move in ways that are unexpected. It is what it is. I've been covering this stuff for 14 years. And I think even on my site today, people are like, I don't understand. Why do we put up with this stuff? Put up with this stuff because, again, this stuff is an inefficiency. It's illogical. Over time, however, gold has done a fantastic job of protecting you against the onslaught of currency devaluation. And it will continue to do just that. This other stuff, while maddening and frustrating, a lot of time is just noise.
Let's talk about one of the most critical indicators in the precious metals market, the gold to silver price ratio. This metric, which shows how many ounces of silver you can buy with 1 ounce of gold, is often overlooked by casual investors, but it holds key insights into why silver might be poised for an explosive rally. Historically, when this ratio is high, it signals that silver is undervalued compared to gold, creating a massive opportunity for those who can spot the trend. Right now, the gold to silver ratio is sitting at around 80. To put that in perspective, during past bull markets for precious metals, this ratio has fallen dramatically, sometimes reaching as low as 30 or even 20. For example, during the 2011 silver surge, the ratio dropped from over 80 to just 31 as silver prices soared to nearly $1.50 an ounce. If that pattern repeats, and many experts believe it will, silver could see gains far outpacing those of gold. But here's the fascinating part. Silver doesn't just follow gold in these bullish cycles. It often plays the role of the late bloomer, waiting until gold makes its move before shooting up with even greater intensity. Historically, silver has not only closed the valuation gap with gold, but has also outperformed it dramatically during the latter stages of bull markets. This delayed but exponential growth is why analysts often refer to silver as gold on steroids. Let's break it down further. With gold currently trading around $2,700 an ounce and silver hovering at $1.34, a simple narrowing of the gold to silver ratio to its historical average of 60 would push silver's price to $1.45 an ounce. And if the ratio were to drop to 30, a level it's reached in previous bull runs, that would imply a silver price of $1.90 an ounce. These aren't just theoretical numbers. They're grounded in historical precedents. And it's not just about ratios and charts. The macroeconomic environment is setting the stage for this kind of breakout. With central banks around the world continuing to stockpile gold as a hedge against inflation and geopolitical risks, the ripple effect on silver can't be ignored. Silver often benefits indirectly from the bullish momentum in gold, as investors look for more affordable alternatives with similar safe haven qualities. So, what does all this mean for you? The gold to silver ratio is essentially flashing a buy signal for silver, suggesting that now might be the time to get ahead of the curve. If history is any guide, this undervaluation won't last forever, and those who act early could stand to benefit the most. With all the indicators aligning, the big question is, will you be ready when the silver surge kicks into high gear?
It's been an interesting year for that idea, right? I mean, I learned that back when I first became a stockbroker 34 years ago. It was this barbell strategy, right? We're going to have equities and fixed income, and it's going to do this. And your ideal allocation, to fixed income is basically your age. If you're 63 years old, you should have 63% in fixed income and 37% in equities, all these basic things. Then we get into this, situation where stocks are going up, bonds are going down. What we hope you don't see is stocks going down and bonds going down at the same time, like we had a little bit last year. Rather than go deeper into that, I just can't emphasize enough for people. You don't have to have 60% in precious metals, but for crying out loud, you should have 5% in gold, something like that. And whether you want to mix in some silver too. And let's just say that narrative takes hold. The last survey I saw from Bank of America of financial advisors worldwide, less than 71% of financial advisors had less than 1% of their clients' assets in the precious metals. I mean, think about that. I mean, how many trillions and trillions of dollars of investment assets are out there in the world? And you just think about the move in NVIDIA or this MicroStrategy company in the last couple of weeks, or, you just think of any cash flow. There's so much of it out there now. And advisors start going, yeah, you know what? Maybe we should have 5% in gold. And I don't even care if, I care. I don't want to own GLD. I don't want to own, whatever. But I don't care if that's the form they want to take. I buy the mining shares, whatever. Boy, you get $1 trillion of new cash, or, $500 billion of cash coming into the sector because people begin to realize that this is their protection and they need to have some just as a hedge, as a protection. Then You can just imagine. It's a classic inflation definition, Elijah. It's too many dollars chasing too few goods. And the goods in this case is how do you get allocated to the precious metals? I'll give you one more, brother. I just wrote something today that made me go back and look. The U.S. deficit I mentioned earlier, around $1.8 trillion deficit in the most recently completed fiscal year that ended on September 30th. The month of October, last month.
Let's dive into what many analysts are calling one of the most bullish technical setups silver has seen in decades. Over the past years, silver prices have broken through critical resistance levels, signaling a potential long-term rally. Most notably, the $32, $33 price range, which had acted as a ceiling since May, was finally shattered in late 2024. This breakthrough wasn't just a small blip. It was a massive 7% daily price surge, a move that often precedes even greater gains in the precious metals market. Why does this matter? Technical analysts view price breakouts like these as confirmation that a market is entering a new phase. For silver, this could mean a rapid climb toward the next major resistance, $1.40, and beyond that, possibly a challenge to its all-time high of $49.80, last reached in 2011. If silver manages to reclaim those highs, it would represent a staggering 4 to 6% increase from current levels, a rare opportunity for significant upside in a relatively short time frame. But the bullish signals don't stop there. Silver's long-term chart reveals powerful formations that have taken years to develop. For instance, the 50-year cup and handle pattern, a classic bullish setup, suggests that silver has been consolidating and is now poised for a breakout. Combine that with the 14-year bullish triangle formation, which silver decisively broke out of earlier this year, and you have technical evidence that supports a sustained upward trend. This isn't just speculation. History shows that when silver breaks out of major technical patterns, it tends to surprise even the most optimistic investors. Look at what happened in 2010-2011, when silver rallied from under $1.20 to nearly $1.50 in less than a year. The current setup is eerily similar, with analysts pointing to conditions that could ignite a similar explosion in prices. Adding to the excitement is the fact that silver's recent breakout has been accompanied by strong trading volumes, a sign that institutional investors are entering the market. When smart money starts pouring in, it's often a precursor to sustained price momentum. And let's not forget the macroeconomic backdrop. With inflationary pressures mounting, central banks cutting interest rates, and global liquidity increasing, the conditions are primed for a silver rally to thrive. Now, here's a question for you. If silver has already shown it can gain 43% in a single year, what's stopping it from climbing another 50% or more in 2025? The technical charts are screaming potential, but the window to act before the next leg higher may be closing fast. Will you seize the moment or watch from the sidelines as silver hits new highs?
I mean, again, you can attribute that. I guess some, they're thinking tax rates might be cut or tax cuts might become permanent. There might be more tax cuts to come, which could widen profit margins. There's also some actual fundamental anticipation going on there. I think there's a fundamental anticipation going on in Bitcoin too. Trump has talked about, a national Bitcoin reserve, whatever that is, or at least, not putting up all the barriers that the Biden White House has done and that Gensler has done at the SEC. And if the U.S. does start buying Bitcoin, I don't know if they will, but he's talked about it. It may have just been a ploy to grab votes. I don't know. But if they do, other countries are going to be forced to do the same. And again, maybe there's a finite supply. I mean, we got Bitcoin futures now and stuff like this, but there's still a reasonably finite amount of Bitcoin out there. So, I mean, the fact that Bitcoin would go from 70,000 to 100,000 in the last 3 weeks, that makes sense too. There's a case for that. What I don't think is that there's a case for gold to be wiped out. Gold's going back to 2,100, this kind of stuff. The central bank demand persists. The math of this terminal phase of the debt-based system persists. And so to me, the bid for physical gold, physical silver persists. well into next year and beyond.
Let's take a step back and look at the big picture. History has a way of repeating itself, and when it comes to silver, the patterns are crystal clear. Throughout previous precious metals bull markets, silver has consistently followed a predictable trajectory. First, gold takes the lead, driving excitement and investor interest. Then, as the rally matures, silver begins to steal the spotlight, delivering gains that often dwarf those of gold. Think back to the 2010-2011 rally. Silver lagged behind gold initially, but once it caught fire, it skyrocketed by nearly 400%, reaching just under $1.50 an ounce. That kind of performance isn't just a fluke. It's a hallmark of silver's behavior during bull markets. This delayed reaction is often referred to as the silver squeeze, where the metal's unique combination of industrial and investment demand creates a perfect storm for explosive growth. What makes this moment so unique? Many analysts believe we're on the cusp of another historic cycle. Gold entered its bullish phase in early 2024, breaking past previous all-time highs with ease. This surge has laid the groundwork for silver to follow suit. The fundamentals are already in place: record-breaking demand, a widening supply deficit, and strong institutional interest. Now all that's left is for silver to play its part in the narrative. Here's where it gets even more interesting. Silver's dual role as both a precious metal and an industrial commodity amplifies its potential during these cycles. Unlike gold, which is primarily driven by investment demand, silver benefits from massive industrial applications: solar panels, electronics, and green energy projects, to name a few. This gives silver an additional tailwind that gold simply doesn't have, making its rallies not just larger, but often faster. The historical data supports this. During every major gold rally in the past century, silver has followed with outsized gains. Why? Because silver is more volatile than gold, and when investor sentiment shifts in its favor, the resulting price movements can be dramatic. In 2024, gold has already risen by 27.7%, while silver has gained 30.95%, but this is just the beginning. Experts predict that as gold continues its climb, silver's gains will accelerate, just like they have in previous cycles. Here's a thought for you. If silver has historically outperformed gold by 2 to 3 times during bull markets, what could that mean for its price in 2025 and beyond? If gold reaches $3,000, as some projections suggest, a conservative multiplier could see silver hitting $60, $90 per ounce. Are we on the brink of witnessing history repeat itself once again? With the pieces falling into place, the answer seems increasingly likely.
Elijah, stop me if we've done this before, but it might be worth doing it again. This is not a gold bar, okay? It's a piggy bank, so don't come breaking into my house thinking you're going to steal a gold bar, okay? I can spit it on my finger, all right? But this is the form that most people recognize, right? Called a London Good Delivery bar, typically 400 ounces of gold, okay? So let's say this was a bar sitting in Fort Knox. I joke. 400 ounce bar. When Nixon suspended the convertibility of dollars into gold, closed the gold window, however you want to put it, price $42. Okay, this was about $14,000, $16,000. That's what this cost you. Okay, you need $16,000 bills to buy one of these. Fast forward 25 years. Now we're into the late 90s. At that point, it takes a little over 100,000 US dollars to buy one of these. Same bar. Okay, fast forward to today. Elijah, what's 2,700 per ounce times 400? Brother, that's 1.1 million. So we've gone from when Nixon cut loose the dollar, about $11,000, $12,000 to buy you one of these babies. Now it's 1.1 million. Has this changed? Is there, Elijah, is there like a hedonic adjustment that the Bureau of Labor Statistics could say this is a much more efficient gold bar? No, it's the same freaking thing, right? It just now takes $1.1 million to buy one. Okay? The gold hasn't changed. Your purchasing power has changed. Which is why you have to have, you can't buy, unless you got $1 million, you're not going to buy one of these babies, but you can certainly buy coal, rounds, little grams, whatever you want. Get some. Forget about this COMEX option, whatever. It's $100 cheaper than it was Friday. Hey, you save some money. That's the best way to look at it, okay? Own physical precious metal. It's your only protection against this madness that, regardless of what you think about whoever won the election politically, the madness is going to continue. It has to. Otherwise, the whole system will collapse under its own weight.
Craig Hack isn't the only one bullish on silver right now. Other top experts are echoing the same sentiment, and their insights provide a compelling case for why silver's time to shine is imminent. Let's start with the macroeconomic backdrop. Central banks have been on a gold buying spree, accumulating record amounts over the past 2 years. While silver isn't part of these direct purchases, the ripple effects are undeniable. Increased demand for gold as a hedge against inflation, and geopolitical uncertainty often spills over into silver, making it an attractive alternative for investors seeking similar protection at a fraction of the cost. Hack has pointed out that silver's appeal goes beyond its affordability. It's about opportunity. He emphasizes that silver's role in green energy, particularly in solar panels and electrification, creates a structural demand that's only set to increase. With global commitments to renewable energy projects accelerating, silver is becoming a critical resource in industries shaping the future. This industrial demand, combined with its investment potential, creates a dual narrative that's hard to ignore. Consider the comments from other market analysts who highlight silver's unique position in the current economic environment. Many predict that as interest rates begin to decline, an almost inevitable outcome given the pressures on global economies, the opportunity cost of holding silver diminishes, making it even more attractive. Combine this with a weakening U.S. dollar and inflationary pressures that refuse to subside, and you have a recipe for a strong, sustained rally in silver prices. Hack also emphasizes silver's explosive potential in the bull market. He explains that silver's price movements aren't linear. They're exponential. When gold rallies, silver follows, but its gains are amplified. It's like the slingshot effect. The lag creates tension, and when the move comes, it's swift and powerful. This aligns with what we're already seeing. Silver has risen by nearly 31% year-to-date, outpacing gold's impressive 27.7% gain. And this is just the beginning, according to Hamke. But what about the skeptics? They argue that silver's volatility makes it too risky. Hack and other experts counter that this volatility is precisely what creates its unmatched potential for profit. They remind us that past bull markets have shown silver's ability to outperform almost every other asset class, provided you get in at the right time. And by all indications, now might be that time. Here's something to think about. If experts like Hamke are right, and silver's role in both industrial applications and as a hedge against uncertainty continues to grow, how long will it remain undervalued? The convergence of market trends, historical patterns, and expert analysis points to one conclusion. Silver's moment is coming, and those who recognize it now could be positioned for extraordinary gains. Are you ready to capitalize on this opportunity before the crowd catches on?
$257 billion more in deficit spending. Now, again, that varies, income from taxes and stuff goes up and down monthly. And so it's not, you can't just go 257 billion times 12. You can see this trend is continuing, right? We're now over 36 trillion in debt. I looked up this morning, the last fiscal year that the U.S. ran a surplus, 2001. Elijah, just for fun, how old were you in 2001? This is how long?
Like 5 or 6 years old. Yeah.
Yeah, you get first grade. Okay, that was the last time the U.S. ran a surplus. Okay, nothing but deficit spending since. That 2002 fiscal year began on October 1 of 2001 The gold price, $290. Gold price today, $2,700. That's a 9x increase. You can also look at it and say your purchasing power, as measured by gold, has fallen by 9x. So, unless you think all of a sudden this is going to change, and it can't, the government cannot, they would absolutely destroy liquidity if they tried to run a surplus again. It would be an absolute, it's not going to happen, 100% promise everyone listening. Any politician says, yes, we need to balance the budget. They're either don't know how it works or they're just full of crap trying to buy votes. This will continue. Okay? I don't know if we'll go 9x again for another 23 years, but, do the math. Even in this environment where the banks manage the price and their risk and hedging this and options that and gamma this and delta hedge that, whatever, even in this environment, gold price up 9 times over the last 23 years while this has gotten out of control. So what is it? Another 9 times in the next 23 years. Elijah, what's that? 27,000? That protects you. That's your hedge. That's why, again, if your advisor hasn't suggested you get some, I think you should find a new advisor. Just take it upon yourself and get some.
Let's talk about the smart money, those institutional investors and market insiders who often move before the broader public catches on. Right now, the signs suggest that these heavy hitters are quietly positioning themselves in the silver market. Hamke and other experts have highlighted a key trend. Speculators, often referred to as dumb money, have been reducing their long positions in silver futures. While this might seem bearish at first glance, history tells us it's actually one of the most bullish indicators we can see. Here's why. When speculators exit the market, it clears the way for fundamentals to take center stage. This exact pattern preceded silver's historic rally in 2010-2011, where prices surged by nearly 400%. With speculative froth removed, the market becomes less volatile and more stable, driven by real demand and long-term investors. Hamke believes this creates the perfect storm for silver to break out, as the absence of speculative noise allows institutional players to step in and drive prices higher, and we're already seeing signs of this happening. The increase in trading volume during silver's recent breakout above $32 is a strong signal that institutional money is flowing into the market. These investors aren't chasing short-term gains. They're positioning themselves for what could be a multi-year bull run. Hamke points out that these early moves are often subtle, but they lay the groundwork for explosive price action when the momentum builds. Another critical factor is the role of exchange-traded funds. Silver ETF holdings have been steadily increasing, with total known holdings rising by over 4% in Q3 2024 alone. These funds make it easier for both retail and institutional investors to gain exposure to silver, and their rising popularity signals growing confidence in the metal's future. But perhaps the most telling sign comes from the broader macroeconomic picture. With central banks aggressively buying gold and inflationary pressures persisting, many investors are turning to silver as a more affordable hedge. This shift is reflected in the growing interest from high-net-worth individuals and family offices who see silver as both a safe haven and a growth opportunity. Hamke also warns that once the general public starts to take notice, the window to capitalize on silver's potential will close quickly. Precious metals bull markets often start quietly, driven by insiders and early adopters, before exploding into mainstream awareness. By the time you're hearing about silver's rally on every financial news outlet, the base gains will likely have already been made. So here's the big question. If the smart money is moving into silver, what's stopping you? This is your chance to get ahead of the curve and position yourself before the next wave of demand sends prices soaring. Will you seize the opportunity or risk missing out on one of the most compelling investment stories of our time? Now let's bring it all together. Hamke's bullish stance on silver heading into 2025 isn't based on wishful thinking. It's grounded in undeniable market realities and historical precedents. The convergence of surging industrial demand, supply deficits, a bullish gold to silver ratio, and compelling technical breakouts all point to one conclusion. Silver is poised for an extraordinary rally. Think about this. Silver's role in the green energy revolution alone is enough to drive demand to unprecedented levels. Add to that the historical pattern of silver outperforming gold during bull markets, and you begin to see why experts are forecasting silver prices, not just breaking records, but potentially doubling or even tripling in the next few years. But here's the critical point Hamke emphasizes. This isn't just about numbers on a chart. It's about recognizing the once-in-a-decade alignment of factors, creating what might be one of the most significant investment opportunities of our time. With gold acting as the lead driver and silver historically playing catch-up with explosive gains, 2025 could very well be a year silver cements its place as the ultimate outperformer. So what should you do now? Educate yourself. Understand the fundamentals and historical context that make this moment so unique. And most importantly, consider how silver might fit into your portfolio as both a hedge against uncertainty and a way to capture significant upside potential. Remember, though this is not financial advice, always consult with a financial professional before making any investment decisions. But if you've been waiting for the right time to explore silver's potential, that time might be now. Don't let this opportunity pass by. Subscribe to our channel for more expert insights, and join the conversation in the comments below. Let's make 2025 the year we unlock the full potential of silver together.